What is up, ADG traders? This is Munya and welcome back to my channel. So today I'm back again with another video that will help you catch a series of spikes, guys. A series of spikes. Remember from the last video I promised you that I was going to give you um, the extension of this strategy, whereby we'll be using higher time frames. In the previous video we were using the 1 minute time frame, but on this one we want to use the 5 minute time frame. We want to use the 5 minute time frame on this one. So if you like what I'm doing, if you want to join us, down below there is my Instagram link. You can follow me on Instagram. We can chat, you can ask questions. You can also join my Telegram channel. The link is also down below, or you can ask for it in my on my Instagram. I'll send it to you, and then you join our trading community. If you are new, we're almost to 20,000 subscribers. Kindly click the subscribe button and turn on the notification bell, and like this video if you want more of these strategies. So yeah, if you haven't already, I have the previous video has the settings that I'm going to be using. The only difference now is we are going to be adding something new, and the something new that we're adding is the moving average, the exponential moving average with period 50, right? So that's the only new thing that we're adding. The Ichimoku, I already talked about it in the previous video. The relative strength index, I already talked about it in the previous video. The MACD, I talked about it. Window 2 relative strength index. So basically you should have a chart like this. On the previous video I was using the 1 minute time frame, but on this one, as I promised, we're going to be moving to a higher time frame, that is the 5 minute time frame. So the advantage with this 5 minute time frame is you will be able to get at least 3 or more spikes in a row, but you have to be very careful. You have to follow instructions, right? You have to follow instructions. I will also leave the link of the previous video so that you get the settings, but I will quickly go through them so that I don't waste time for those that keep following my work, right? MACD, window 2. I don't want to waste time for people that already follow me closely and that know what I'm talking about. Okay, so the only new thing here is the moving average with period 50, the exponential one, which is the green one on the main chart. So how does this strategy work? You're going to go to your 5 minute time frame. It works for both boom and crash, and boom 1000, boom 500, crash 1000, crash 500, right? But you have to follow instructions. You have to practice patience, right? As usual, you have to practice patience, and you have to know that with this strategy you might get 3 or 4 entries per day from the same index. Let's say if you are trading boom 1000, the strategy might give you confirmations 3 or 4 times a day, right? So you gotta be patient. You gotta exercise patience. So what do we do? As usual, I'm on boom 500. I'm on boom 1000, sorry. And the first thing is indicator window 1. Lines have to be close to the 20 right here, the 20 right here. And then on indicator window 2, lines have to be close to the 10, right? Once you do that, you're going to come to your main chart, and usually you have to wait for price to cross your moving average, your EMA 50 here. And once it has crossed, you wait for 10 minutes, right? Wait for 10 minutes or less, and then enter into a buy. Remember, this is boom 1000, and then enter into a buy, right? You are going to get this movement, this movement, this movement, this movement. So it will be a series of spikes that you catch at once, right? So first thing is you want your lines to be close to 20, and here you want your lines to be close to 10. That's the indicator window 2. Once you do that, once those two conditions have been met, you want your candlestick to break the EMA 50. your green line here. I don't know what color you put it, but the EMA 50 right here, and then wait for 10 minutes, or you can even enter the trade right now. You can even enter the trade, but I will just, most people will be scared of the retracements. But if you want to be sure that you don't miss it, you can enter it once it has been broken, right? And then you hold. You're going to hold for even 10 to 30 minutes, because it will be a series of spikes, and once you get those series of spikes, you're exiting, right? So the time, the amount of time you wait, is determined by the time it will take for the series of spikes to occur, right? So once the series of spikes, okay, they might occur most at least 3, 2, 3, 4, 5, depends with market conditions, but you should get at least 3 series of spikes in a row, so that you get this movement, right? Let's look at another example. Maybe you might think I'm doing it wrong. Okay, here is another example. Lines close to 10, close to 20, price breaks our EMA, and then boom, you see this upward movement, right? Even if you had missed it, you would still get the second movement, right? So it's a series of spikes. If you go to the 1 minute time frame, you'll find out that these will be at least 3 spikes that have occurred, that have caused this price jump, right? And of course this price jump. Let's look at another example. Right here, price close to 10, close to 20 right here, and then price breaks, right? And then if you had waited 10 minutes, there was a retracement, but then later on price moved up. So eventually this is a change in direction. If these conditions are met, it just basically means price is changing direction. That's why you see that your EMA 50 will be pointing down, and then eventually will point up. EMA 50, remember, is our trend. EMA 50 is our trend. So here initially it will be pointing down, and then it will tend to point up, because it will be a change of direction. Once this cross happens, it becomes a change of direction. I can go on and on and on and on, but let me to shorten. Okay, maybe another example here. Remember, see, it's pointing down, right? Which means we were in a downtrend. But the moment these two conditions on the indicator window 1 and 2 have been met, and price crosses, see, we are now in an upward movement. So you can actually hold for hours on this trade. I always encourage you to practice these strategies on your demo first, and get comfortable with them before trying them on your real account. Maybe let's take a look at crash, maybe 500, so that it becomes even. I'm trying to make this as short as possible. Most of your time you should use it to practice. Same happens this time. It's opposite now. We want it to be closer to 90, closer to 80 here. Price breaks, series of spikes come, right? Price breaks, and then a series of spikes come, right? I think this is clear. Like I said, you really have to be patient, because the setup, okay, here our price, our indicator 1 and 2 have confirmed. We were just now waiting for price to break, and then it broke here, and then a series of spikes came, right? So all conditions have to be met. All 3 conditions have to be met. I get a lot of people saying the strategies were not accurate. Is because you're probably doing it the wrong way. That's why I introduced my Telegram, where I also teach strategies. I introduce my mentorship package. I'm not here to promote that, but there is a mentorship package if you really want to learn these things, right? Same thing, series of spikes can go on and 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 on, right? So here another entry. Remember, we are in our 15-minute time frame, so this is probably within the same day, and you're getting all these entries. And remember, we still have other indices to trade, right? So overall, it is a continuation of a previous strategy. my previous video. There's the other settings. You can go check them out if you were not able to grab these ones. And if you want more, link in my Telegram. I think I'll also teach this strategy at the end of it, because it's a series. Remember, I said I'll move on and on to higher time frames and higher time frames until you get a hold of it.
2, 6, 3.